And then why don't Tal, why don't talk to you, because you had a security token offering a while back that wasn't as successful, but good things came from it. So why don't you talk about that?
Right. So we were the fourth security token ever to be issued, the first fully tokenized fund. And we did it in a much more difficult environment than there is today, because we had to invent a lot of the things as we go along. I actually think it was very successful, and I'll tell you why. We looked at what we raised initially, and the main sale closed at the end of March as the first closing of the fund. And our intent was to do the first closing so we can start investing in a portfolio, because we saw a lot of opportunities in the market that we wanted to leverage on, and come back with an established portfolio, and we do. We already made 7 investments, the 8th is on the way, and continue raising the fund, which is what we're doing now. We're going back. By the way, we specified it in the prospectus up front, that the main sale is the first closing, and then later on we'll come back and continue raising for about another year the rest of the fund. I think that we learned a lot in the process. By the way, like the previous statement, we thought that that at least half of the investors will be crypto investors, and eventually I'll say about 10% of our investors were crypto investors. The majority of our investors were family offices, funds of funds, angel funds, and high net individuals. Most of them are traditional investors, right? And I think we probably see this a lot now in the security token industry, where it's the assets that are being tokenized are ones that are much easier for people in the traditional securities industry to assess, to value, and to understand, right? There's the little hop of what do I do with this token, but the assets behind it and the economy and the value of it is easier for them to understand. And us being very traditional in terms of the model, we're a VC model, and we publish a quarterly net asset value, so people can reference that. Makes it very interesting. And our focus is on creating exposure to investors to the massive growth of the tokenization industry, because we invest in the ecosystem of that industry. So as this industry grows, whoever invests in SPICE gets exposure through our expertise in this market to the growth of that market, and hopefully we make good choices so people can benefit. So far, we did. We issued the tokens in kind of end of March. People acquired tokens between January and March for rates of somewhere between $0.8 to $1 per token. The last NAV published was already at $1.38, and that's in a period where crypto went significantly down. And it's really interesting because it shows 2 things. One, that it's an interesting market to invest in, but second, that the claim that we kept making, that security tokens are not related to the behavior of the crypto market, stands, because the value of the token is derived by the underlying assets, and has nothing to do with crypto. So.
And it just, when you talked about the price of it, can you talk about where it trades and how it trades and the liquidity?
Yeah, so as everybody knows, there is not a single live security token exchange that is regulatory compliant. There are several vying for being the first. I think the 2 that most people know of are T0 and Open Finance. As soon as one of them is up, and I think it's going to be Open Finance, SPICE is going to be the first token to be traded there. Same, and as soon as T0 is up and open for trading, will be traded there as well. But there are about 12 exchanges that I know of, at least, that are in this process of going live with regulatory licenses, some of them in the US. We know the Gibraltar Stock Exchange is on its way as well. Hong Kong, there's a bunch of them that are on the way.
And so how does, since it doesn't trade on the exchange, how does it get priced?
So first, the price I was quoting was the net asset value per token that we publish, and that is audited by Ernst & Young every quarter, right? And because the value of the token is derived by the underlying assets, then when it starts trading, it makes sense that it trades with some gap, either above or below, but related to the NAV that we publish quarterly, because market forces will balance it somewhere around that. By the way, it's also traded peer-to-peer, like any token, as long as both ends of the transaction can regulatory hold the SPICE token. So.
Okay, cool. Thanks, Tal. So Daniel, thanks for waiting. You want to talk about your experience with your tokenization?
Yeah, so we're a little bit different. We're a software company, and our platform, we raised $2.5 million in private equity last year. We decided to open up an STO in the late spring, early summer, which was, I guess, if we're in crypto winter, that was crypto fall. And so, you know, long story short, the STO is still open, but has been really slow because of the misnomer of STOs having to follow crypto. So we've been just raising private equity since. So we definitely learned a lot of lessons, and I think it's the topic of this panel. But one thing that we did learn through the process was, you know, we eventually, based on our platform, I won't go into too much about exactly what we do, but we decided to, we're creating our token on the Stellar blockchain, on the Stellar platform, which we found to be quite the excellent platform to host a security token. It has all the operational features natively built in to their token, you know, whitelisting, blacklisting, lockup periods, all that's already all built in. And then part of what we do in our Gen 2 or 3 of our product is global remittance. And so Stellar becomes an excellent blockchain to be able to do that with. So.
Can you talk about any of the vendors you used, or continue to use, I guess, in your SDO?
What do you mean vendors?
Well, like, did anybody help you design the token, or?
Stellar and their partner Lightyear, working with them specifically.
Okay, cool. And so, Stefan, so now you've sold 18 million of these tokens.
That's right.
Now what?
Well, we designing a 100 million token that's going to be a real estate developer in Thailand. It's actually, we're super excited because that's going to be a winner. Thailand is one of the countries that has come up with crypto regulation. And the Thai SEC is super excited about bringing the right quality product to the market, because at the end of the day, for a market to be sustainable, you need to bring quality product. The first 10 or 20 deals have to be winners. If you look at what happened to the Reggae Jobs Act on the stock exchange, I think that 10, 15 companies that have done their IPO, they're all trading at 80% discount to the IPO price. That market is dead. So what we've done in going in countries like Thailand, I've lived there for 25 years, so that's the reason we chose that country. We really team up with the #1 players, and we work with the regulator to bring a product which is viable. So in that case, the developer selling 75% of their development to the normal food chain, which means pre-sale, 15% deposit, and he bulked 25% of the condo units into an SPV that is being tokenized to the general public at a discount to the price per square meter of the natural sales. So what it does, A, it allows all the people that don't have the purchase power to buy a full apartment in Bangkok, which is about $1 million, to participate to the Bangkok real estate market, and B, it's at a discount to the normal price, so the regulator feels super comfortable that nobody's going to lose their shirt. So we're super excited to work on that. The token should be launched probably in Q1 2019.
And well, you can go market it next Monday is the start of Crypto Mondays Bangkok, so you can go there.
Here we go.
and market it. And what investors do you think are you going to go? Do you think it'll be kind of the same set types of investors?
It's completely different. First of all, we are buying 25% of a public listed company in Bangkok, and we're using that existing broker-dealer to apply for the crypto license. That existing broker-dealer has approximately 150,000 active brokerage accounts and has a joint venture with the #2 bank in Thailand that is at 56% owned by the Ministry of Finance and that has 3.5 million bank accounts. The difference between the environment in Thailand and in the US is the tokens are their own ecosystem, so there is a special regulation for token, and the SEC allows up to 70% of your capital raised to be to the general public, like crowdfunding, and the approach to the approach is they actually put a cap of $10,000 per individual per subscription. But it's going to be a general public, it's going to be a hot sale, it's going to be the line out of the door, because if we, all of us here that have an interest in the security token industry, we need to make sure that the first 20 or 50 deals are winners. Otherwise, we're all going to look at ourselves 5 years from now and say, we could have made it, but we didn't.
And to also now, in addition to your own security token, now you're helping others on the Securitize platform. Can you talk a little bit about that?
Sure. Sure. So Securitize was born from Spice, because when Spice was working on issuing its token, we built a platform for ourselves. And then we realized, hey, there is significant value here to the industry, and we spun it off as an individual company. Securitize is the first technology platform for issuing security tokens end-to-end. It allows issuers to manage the whole process of raising the funds and issuing security tokens, and then managing compliance in secondary trading throughout the life of the token in every regulatory jurisdiction that is relevant to that token. It's a very complex undertaking, and it involves protocols and a platform and a lot of other things. We've seen through Securitize multiple security tokens already issued on the platform in different jurisdictions. Spice, by the way, was the first token to be issued on Securitize, so we eat our own dog food, so to speak. And Spice has already gone not only through issuance, and it's also gone through an upgrade of a token, which is another stage that no other security token in the market has done. It's equivalent of a fork in...
Yeah, Brett, I guess on an earlier panel today, Greg Gilman from Science mentioned, I guess, how they're going to be working with Securitize to reissue their token.
Correct, yes. And it's interesting because the issuance platform is really complex, a lot because of the regulatory complexity around the world today. And it's not a complexity that adds value to any issuer. So it makes sense for issuers to use a platform, whether it's Securitize or any of the other platforms that are out there, like Arbor or Polymath and so on, because it's a complexity that adds nothing to the business, right? It's one of the things you want to not deal with. There's enough difficulty in raising the money and in building the business model and providing value to investors to deal with all the regulatory mess. But it's very interesting for Securitize to see that, at the end of the day, it's a company that raised hand and said, we're here in March this year. And it's going to make already a lot of money in revenues this year. It's going to double it next year. And it's a very interesting example of what happens in this industry. Because this industry is a little bit different than many other industries I've seen, definitely as an investor, where a typical startup starts with an idea and then they have to bring it to a product, and then they have to go with the go-to-market, figuring out customers or clients, and getting it wrong and doing it again until they hopefully succeed. And here, the business is waiting for any ecosystem player that is ready to provide services, because there are tokens being issued assuming that the ecosystem will come. And so when companies come and provide services in this ecosystem, the business is standing there waiting to pay. And so I think as investors, it's an industry that is very interesting to invest in companies building this ecosystem. Because because of the velocity of growth of the industry and the fact that it already has business waiting to be done, potentially the density of unicorns could be much higher than any other industry.
Interesting. So, Daniel, what do you wish that you knew when you started off about the security token process, issuance process and stuff? What do you wish you knew then that you know now that the audience should know?
I think, there was a lot of hype coming out of December and January last year, or this year. And I think, we weighed the pros and cons between doing an STO or not. And I think probably like a lot of other friends and colleagues that we know, it was just more cumbersome and time-consuming than we imagined. Obviously, with regulation and compliance, we were able to somewhat, I don't want to say completely figure it out, but we were able to get to a place where we launched it in May and fully Reg D compliant, passed through multiple eyes. But it definitely sucked a lot of energy out of the company in terms of actual, focusing on our product and on our business. So knowing in advance that, we needed to segment time and resources to just focus on that would have been probably more helpful.
And so, and when you look back in do you think it was just kind of naivete about the process, or, why do you think you misunderstood, miscalculated that?
At the end of the day, we'll take full responsibility for diving into it. But there definitely was hype. There's definitely the market that's speaking to you. There's definitely ICO advisors out there that will try and guide you, or into this world. I think there's just a lot of voices back then, and we're back to focusing just on the business now, and so
that's hard enough.
Yeah, that's hard enough. So. We definitely are. We definitely believe in blockchain. We believe that in the token and the tokenization of our product. But I think because there's no place for true liquidity and no true exchange right now, we're taking the time to focus on the product. And if and when the time comes to actually get back into that, we definitely will.
And now, Stefan, thanks, Daniel. And now, Stefan, so you're on to your second STO.
Yeah, it's super hard. It is. But this is why we like it. Because if it was easy and the market would be there, we wouldn't be in a position to build a company that's going to be worth a lot of money in the future. But you know, I've been to a lot of those conferences, and there's so many great people with great ideas, but there's no such thing as taking an asset, putting it in a machine that would create little token and have people waiting at the door to buy those tokens. And
I
that's
think we're
only,
a week away from that, 2 weeks? Yeah.
but, but it's so super important to understand that, because it's the same as if you build a hotel and you say, I built the best hotel, I'm going to open and customer will come. It doesn't work that way when you create a new asset class. So to be successful, you need the product, you need the technology, and you need the people. You need the marketplace. You need to say, what's my distribution? And more importantly, what is the expectation of the distribution? Because the next challenge will be, where does the liquidity come from? Who's going to trade those tokens? And everybody talk about the dark pools here and the black pools there. At the end of the day, the only reason people will trade it is because they want it. And you need to create demand. And that means bringing quality product to the market, having your sugar daddy that can actually take your offering, and it's better if you have 50 of them, so you can issue more, and really put your money where your mouth is. I think that the market is there. I think that people are watching, but they'll be watching the first one, the second one. They may dip their toes on the third one. Then they'll get excited at number 10, number 20. But we need, I mean, the way we did our offering, we had no expectation. So no expectation equals no disappointment. But we feel the market is there, it's going to be a massive industry, it is super early, and we should all be working together because we all going to find ways to take advantage of the situation.
You know, now that you're onto your second one, what are you doing different in the second offering? What did you learn, you know, from your experience in the first?
First of all, we know what not to do, so that is as important as knowing what to do. Secondly, we take a product that has a market appeal.
When you say not what to do, give us an example.
What not to do is don't believe that just because you're out there is going to come naturally, and take it, not being complacent, you know, and also spend the time to educate your client. Spend hours on the phone answering basic questions. And what not to do is to take it easy, because then you're going to fail. So what we're doing differently, we take a product in Thailand that is really a consumer product. You know, everybody wants real estate to wants exposure to Bangkok real estate. A farmer that has a disposable income of 100,000 US or 10,000 US cannot buy it. But for as little as $10, he's going to gain exposure at a discount to the price sold to the general public. So we know that because the product is so good and the sponsor of the deal is #1 real estate developer in Thailand, the chance of success will be there. But at the end of the day, education, 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 patience, education. That's what it's going to take.
Cool, education. Tal, so you're obviously seeing a lot of things that are going on. Stefan talked about, you know, the real estate, I think, you know, is something that probably most people know that worked in crowdfunding, working here. You know, from the securitized perspective, what other kind of asset classes are you guys looking at? Do you think, you know, this is going to be big or this is going to be big? You know, what have you seen that's worked?
So obviously, like everybody suspects, real estate is big. Okay, it's big because you're starting with a huge asset class around the world. You're talking about hundreds of trillions of dollars in real estate that can be tokenized. So we've seen at least 30, 40 deals related to real estate tokenization in the last 2 months. Okay, and that's just a sample. I don't assume I see everything in the market. We see the first.
And I assume there was a pretty wide range of quality of projects.
Of course, there's anywhere from individual projects, like we're talking about here, to tokenization platforms for real estate, right? So anywhere in this range, and obviously there's a big difference in quality of projects. I've seen a lot of talk about tokenizing debt and different debt types. This is also a huge market. It's again hundreds of trillions of dollars in potential. And interestingly enough, we've seen several deals popping up of public offering type of deals that are going security tokens as public offering. So F1 or S1 as security tokens. Very interesting. We as SPICE are invested in one of those that are going this way. And
Can you share with us which one?
Sure, it's called INX. It's an exchange that is focused on digital assets for institutional investors, licensed in the US, and it's issuing an F1 token as a security token to be used both to raise some of the funds and also later on as the trading token. So
Okay, cool. Let's give a big round of applause for the guys on the panel.